We're joined by Dana Peterson, who is the Conference Board Chief Economist, and Joe Brusuelas, who is the RSM Chief Economist. Great to have you both here in studio with us and helping us break down some of these figures here this morning. Dana, I'm going to begin with you. Kind of, you look at this report. What is this set up for the decision that the Fed has in front of it in September and perhaps even November, too? Anything that jumps out to you?
Well, what really jumped out to me is that you still have this kind of three parts of the labor market where you have the former pandemic darlings cutting, which included transportation, warehousing, and information, and also temporary help. But also you still see strength in those areas like leisure and hospitality and healthcare. Meanwhile, everyone else is just kind of sitting tight. So I think this is still the same situation that we've seen. Also, there were downward revisions in the payrolls for the last 2 months. So the Fed should look on that favorably. But certainly we had yesterday's inflation data, which weren't really going in the direction that the Fed wants. So I think the Fed may still want to wait for those long lags to kick in and come back in November and maybe hike then.
And Joe, Rachelle here. I want to ask you, I mean, obviously people had their different estimates going into this. This is a pretty bumper report here. What are your big takeaways?
All right, this is another rock solid American jobs report. We see we see hiring cooling. We see wages cooling. We saw 110,000 downward revision to the past 2 months. This plays into exactly where the Fed wants this jobs data to go and sets up nicely for a September pause. Now, in terms of the big takeaway, just a little quick math here. When I looked at the higher wage component, 174,000 of the 187,000 jobs created were goods producing, construction, manufacturing, private healthcare, so private education. So we still are hiring at a pretty strong clip here. Look, we've got a significant problem in terms of labor supply in this economy. Even as the economy slows later this year, you're going to continue to see unemployment bounce between 3.6 and 4%, right? We're just not going to see that big jump in unemployment like we've seen during past slow periods. So this is going to be very interesting in terms of the policy interpretation and the forward guidance. Look, lastly, out in the real economy, financial stress is actually up a bit. And the long period of rate hikes is really beginning to take that pound of flesh away from financial actors. Firms are really having a problem finding capital to invest. This is going to be an ongoing narrative, I think, as we enter into the final stretch of 2023.
What about financial stress for individuals and households, Dana, as well? I mean, I'm looking at one of your quotes from the Conference Board and the monthly reading of consumer confidence here. How does this play in and the employment situation and employment conditions into consumers' mindsets right now?
Well, I think it's definitely weighing on the consumer. In our consumer confidence measure, they were less ebullient about jobs. They're saying jobs are not as much available now, and they're worried about the future. And hence, they're also worried about their finances and income. And I think that all coalesces into kind of a bad story for consumers. Many of them are running out of that excess savings. It's probably going to be depleted by, in the next few months. And they're spending using credit cards, and we're seeing delinquencies rising, and even among banks, especially small banks, charge-offs are rising. So consumers are definitely under stress. And that, let's not forget, there's also the student loan issue, where at least they're going to have to start paying the interest starting in October. So slower income growth, higher debt, and payments for student loans suggests that we're going to see slower consumer spending. And I think consumers are starting to internalize that, at least in what their sentiments are saying.